This is total growth investing, where price growth is not enough. Dividend growth is not enough. We want to find stocks that grow in both of these categories. And if we can find them, we can beat the market. This series of videos will be doing a basic review of the top stocks on my total growth investing ranked watch list. I have 673 stocks on that list, and I want to focus on the top 10. Let's talk about S&P Global. I didn't know S&P Global had such a history. It was one of those stocks on my TGI list that just kind of came out of nowhere, and I didn't know where they'd come from. Come to find out, it's because they weren't S&P Global. This is the McGraw-Hill Publishing Company. I remember McGraw-Hill when I was in school, back in the 70s and 80s. Most of the textbooks that I had were coming out of McGraw-Hill. So, where did they get started? The McGraw Publishing Company was established in 1899 by James McGraw, and the Hill Publishing Company was established in 1902 by John Hill. In 1917, these two companies merged into the McGraw-Hill Publishing Company. Now, where did the S&P come in? In 1966, McGraw-Hill purchased the credit rating agency Standard & Poor's. They've been in control and helping to build that market ever since. Many acquisitions, mergers, and spin-offs later, we've seen this movie in just about everything that we've looked at. Any company that is that has a long history has bought other companies, been bought out, mergers, acquisitions, spin-offs. Go to Wikipedia. It's an amazing story. In April of 2016, the company finally changed its name to S&P Global, and their focus is financial data. Their current organizational structure includes a couple different focused, mix and match. I say focused, but each one uses the data of the others. So the S&P Global ratings focus on investment research. The S&P Global Market Intelligence provides real-time data to investors. Now, these are institutional investors. These are the big dogs. These are big investors that need data on a regular basis. The S&P Dow Jones Indices. Now, this is a joint venture with CME Group, which is the Chicago Mercantile Exchange, and News Corporation, which joined about a year after it was formed. They maintain the Dow Jones Industrial Average, the S&P 500, and over 130,000 other indexes. That's not a typo. That's an incredible number. They have a lot of employees looking at a lot of stocks. They also have S&P Global Platts, which maintains the benchmark price assessments for global commodities. I also wanted to point this one out, CRISIL. They started in 1987 in India, and they became the largest market research company in India. In 1996, McGraw-Hill purchased a small minority stake and then took majority control in 2005. If you go to their website, they literally say an S&P Global company. So first impressions. The stock price is $331.98. That is extremely high. But then you look at their total return. And I'm thinking, when I look at this number, maybe it's justified. Today it's 1,344.03. Okay? 1,000% increase over 10 years. You gotta love stocks like that. Are they a household name? Everybody who's in investments knows the S&P 500. Maybe they don't know that there's a company behind it. They do now. Their customers are the entire world market. I mean, seriously. Market capitalization, 80.31, and their sector is financials. Their industry is financial exchanges and data. Here's that price graph. This is quite a growth. This is taking out to max, but McGraw-Hill has been on the stock market for many more decades than this. We'll take a look at the numbers on Seeking Alpha in a little bit. I just wanted to show this. Dividend history and growth has been spectacular. So they only changed their name in 2016. All of this is McGraw-Hill Publishing. I see 3 stock splits, and it's growing the whole time. In fact, it's accelerating growth. They've been growing their dividend for 47 years now. Their next dividend, well, their last dividend that they announced, was announced on May 13th and paid on May 26th. In line with previous, it looks like from the dividend history, they raise that every single year. Their forward yield is 0.9%, which some people might consider low. But again, low is a relative term. Yield on cost. It's going up as you look further backwards in time. That's always a good sign. Total return. This is taking out the graph out 10 years. So this is only 10 years of history. Compared to the S&P 500, 272.15, they had 1,341.37. Now, Seeking Alpha, this is a graph that I grabbed yesterday, and market fluctuations always create a little bit of flux in the graph, and that's fine. Let's take a deeper look on Seeking Alpha. So here's 1 year. Look at that. This is the COVID-19 crash, and they have completely recovered. Taken out to max. That's kind of hard to see. We'll look at that at the bottom of the Momentum tab. Here's their financial statements, but I want to go to Overview. S&P Global Incorporated, together with its subsidiaries, provides ratings, benchmarks, analytics, and data to the capital and commodity markets worldwide. Founded in 1860, remember mergers and acquisitions, and is headquartered in New York, New York. Let's look at their dividends. Their dividend yield right now is 0.81, which again, really low. But they've got a lot of room to grow, and they've been growing. Let's take a look at dividend growth. Over 10%, even over 15%. There's the graph we saw with the stock splits and the rebranding in 2016. Let's take a look at history. So let's see, I said they rose it every single year. So here's 4 quarters, 4, 4, 4, and 2. So by this pattern, I'm guessing that we will see 2 more quarters at 0.67, and then they will raise it a small amount. It went from 0.5 to 5.7, and then from 5.7 to 6.7. We might see this go up to 0.75. Just a random guess. Estimates we'll get to. Here's Momentum again. And let's look at that in graph form. Here it is after 10 years and the max. Their dividend has made a difference, but not much, because their dividend yield is so low. But still, 1,500%. And here's that graph. Completely recovered from the COVID-19 crash. And you can't really argue with success. All right. Let's look at some valuations. S&P Global on dividend stocks.cash. His data goes back a ways. Oh, wanted to mention this. This is a special dividend that he has indicated as such in 2012. And this was interesting. This was due to the sale of their educational. Okay? They originally were planning to use the capital that they received for their educational publishing company back in 2012 for a stock buyback. But the board of directors changed their minds and instead sent it out in a massive special dividend to all shareholders. So that's why the payout kind of goes into the stratosphere here. They are no longer in the educational business. They spun that away to focus on financial data. Let's bring up valuations. Because you may have noticed I said the price was high. And it is. Let's bring these in one at a time. Here's the stock price. Going back to the beginning, there we go. So it's extremely high right now. It's at an all-time high. Their earnings per share, well, here's a dip from a merger and acquisition. Let's take that out by bringing up adjusted earnings per share. That takes out one-time expenditures. And operating cash flow, nice. Looks like they had a spike in early 2020. We'll have to look through the news to see what that is. And dividends, there's that special. Now let's look at fair value. Fair value takes the numbers from each of these and does a basic calculation on them. So it turns it into a curve. And this says the fair value is lower than it is now. Here's one based on adjusted. And here's the one based on cash flow. I want to focus this a little bit. So let's limit it just for the last couple of years when we have a good set of data. According to this, the current price of $328.19 is high. The fair values will eventually catch up, but that's further in the future. I'll be honest, I would not consider this a buy right now. It's a great company. It will do well. It will continue to grow. But if we're in this for the long haul, on a total growth investing strategy, we want increases in both price and dividends. And right now, if it's overvalued this much, if we bought it, we might be losing money. If you own it, good job. But I don't think this is a good time to buy. Not until the actual price comes down and peaks below the fair value. Let me know what you think in the comments. I'm looking forward to seeing this company continue to expand over the next couple decades. I am not a financial advisor. Anything I say on this YouTube channel should not be seen as financial advice. This is my opinion based on what I'm seeing on websites and other places. Your strategy is your strategy. Do your own research, do your own due diligence. Good luck. Thank you for watching. If you liked this video, please click the like button and subscribe to the channel. I'll be doing more reviews like this of my top-ranked total growth stocks over the next few weeks. And I also have some guests planned with other ideas that you can use to beat the market over the long term.